How CFDs are being used by day traders. Many day traders in various markets are beginning to use CFDs, or contract for difference trading. These types of contracts allow investors to get a leg up on certain markets when they can make accurate predictions of prices in either short or long positions. CFD trading started around the 1990s in England, and was based on equity swaps. CFDs were originally not taxed, which was an added benefit. CFDs work by initiating the contract between an investor and a CFD provider. Initially, the trade starts through a specific instrument that goes through the CFD provider, creating a position. These trades do not ever expire, but close when the other trade is completed. Finally, the trade difference is paid either as a profit or loss, and the provider can alter the trade as a part of the standard deal, such as with a commission or specific fees applicable to the trade. While CFDs have no expiry dates, they can be rolled over if they have positions that aren't closed overnight. In a way, CFD trading is almost a little like gambling on the market. If an investor makes a smart decision, he or she will ultimately gain a lot if the investor has accurately predicted whatever happens in the trade. For this reason, CFDs are becoming more popular amongst day traders to help boost income and value levels for each investor. Of course, there are specific CFD brokers who are available to assist with CFDs. These brokers obviously specialize in the process and fully understand how these types of trades work. While CFDs mostly started out being used by hedge funds on the London markets, they are now used by investors all over the world. There are also specific CFD training books, programs, DVDs, and audio files which teach the process of CFD training to new and experienced investors alike. One advantage of CFD trading for novice investors is how easy CFDs are to perform and how initially valuable they can be. They are fairly low risk and for this reason can be a great option for the beginning investor. With CFDs, there is less risk that the market will start to fail and that the investor will lose money they might normally have gained. The best way to get started with CFDs is to find a good guide to learn all the basics of both investing and trading and CFD trading specifically. There are many quirks and nuances to these types of trades that can make them more initially profitable, and so it is wise to learn something about how they actually work before really putting much time and effort into making them. It is also important to understand something about the market itself and how investing works so that not too much risk is taken at first, until the investor knows a lot about trading and can make more accurate predictions. Basically, CFDs let the trader experience all the same benefits an investor would get through owning shares of a stock, but without actually having to own them. By this tactic, there is a lot less risk and time involved, and it is essentially the way to make money on the stock market immediately, or at least within a day. Getting started with contract for difference trading is a fairly simple process and just requires a little time and research to thoroughly understand it. It is however important to understand, or else it could end up being a waste of time and valuable investment funds. Contacting an expert or consulting research books about CFD trading is a good way to get a safe start in the process.